everyday life issues, broken down to help you build your own opinions on the issues that matter most. Coming to you from Austin, Texas, this is The Deciding Factor with your host, Alton Hill and John Herzog.
Hey everyone, I'm John.
I'm Alton.
And we are doing The Deciding Factor. If you have never seen the show or heard the show, we appreciate your time that you're spending with us today in order to listen in. We have an interesting topic today about stock trading. It's actually, can options pay my bills? And so we actually are going to have an expert in this field that's going to help us walk through it. And then we also have our own experiences with it as well. And it's a different time, especially with all the coronaviruses. The stock market's constantly going up and down and all around. So let me introduce you to the man on the bottom here. His name is Jim Taylor. Jim has been a trader in securities for over 25 years. In 2003, he moved into the investor education field as a personal coach and national workshop instructor, and has taught for 3 national large investment education companies. He built and taught many highly successful investors training programs, and to date, he has taught more than 65,000 individuals on how to be active traders in the stock and option market. Jim specializes in investor education and personal coaching on stock options, technical analysis, and advanced options. He has taught these courses in every state in the U.S., every province in Canada, Hong Kong, Singapore, Malaysia, Guam, Saipan, Puerto Rico, U.S. Virgin Islands, and London. So his resume is getting up there. Jim also primarily focuses on teaching income-generating strategies using options that produce weekly and monthly income. These strategies include debt and credit spreads, as well as specialized weekly options strategy that focuses on selling calls and puts, utilizing Jim's unique Ping-Pong strategy. His expertise also lies in the execution and application of these individual strategies, not just in the education. So, Jim, how are you doing?
Good morning. I am great. Thanks for having me.
Absolutely.
Yeah, welcome. And if I can just interject, Jim is also extremely handsome and also an elk hunter, which bio doesn't say, but welcome, Jim.
Well, he's also your personal mentor and trainer. Is that right?
That's right. Yeah, we finally coerced him enough to join us on here and shed some light on the options game.
Yeah. So I know you've got a story, and then after that story, I'd like to get some definitions. So what do you have for us?
Well, I know I normally don't have a story to kick off our podcast with, but we almost had to cancel this morning. Have a little emergency going on. Not too long ago, we were down at the river and we got a couple crawfish and we put them in our aquarium. Well, one of the crawfish is now molted. If you're not familiar with crawfish, they're kind of like lobsters and they don't really grow. They just shed their skin and then like they're bigger, kind of like a snake. Well, this one's ate the other crawfish, and then just now he ate fish that we've had for at least 2 years. So a lot of panic in the Hill House this morning. He's just sitting there like eating the fish. And all of my little girls are having to watch that. So
you almost canceled the show for seafood.
Hey, man, it was pretty traumatic here.
Man, I see where I stand in your life now, man.
That's worse than your dog dying.
Well, I'm going to mute you now, Alton. Screw you. Oh, man. So Alton does what you teach, which is the options. I actually prefer the day trading, and then, of course, I did it the wrong way to begin with and got locked out of E-Trade. But found out that there's other options to go overseas to do that. So I've got this ADHD thing going on to where me and him go back and forth. The short game, like y'all do, where it takes a week or maybe longer, kills me. So I guess let's go over some of these definitions first. That way, when we're talking in the show, people will understand exactly what we're talking about.
Absolutely. You want definitions of different types of trading? Should we start there?
You're the trainer.
Let's do it. Yes, and I fully understand what you're talking about as far as day trading. I do have a fairly extensive day trading background. However, it dates back more than 20 years. That means I got wise 20 years ago, just in case you're wondering. I day traded for a living for 3 years, and I have to tell you, it was exciting. It was crazy. I'd like to say it was profitable, but it was 3 steps forward and anywhere from 2, 3, and 4 steps backwards. Just depends on what you're doing. But the definition of a day trader, and a lot of people do not understand that. Day trading is really when you're throwing in large sums of money for a very short amount of time. We're talking minutes, right? Minutes to hours. A day trader will make multiple trades throughout the day and then be flat in cash or out of their trades by the end of the day. They typically do not hold them overnight, hence the word day trading. Now, I have a lot of interesting stories that I won't bore you with, but I do have a record of 154 trades in one day.
What?
154 trades in one day. That's why I no longer do it. It was too intense. Yeah, I would. You would throw in money. I would throw in money into a stock like Apple for 10 minutes, just trying to sip a small amount of money. If you buy 1,000 shares and, the stock goes up a little bit, you pull that money out and you make a profit.
Right.
So that's day trading. It's not for everyone, as you and other people know, but it is very exciting, very appealing to a lot of people. There are a lot of regulations that have been enacted ever since about the year 2001 on day traders just to protect them, basically. So you have a day trader getting in and out flat at the end of the day. You also have a swing trader where you might be in for just a few days, right? Holding your positions overnight, right? I am a stock and options trader, and I don't have a set defined time frame, whether it's days to weeks or perhaps even months. I'd have to say my average hold is weeks to just a few months. Certainly we can be an investor. And there's a difference between a trader and investor. Trading, we're trading for income, generating wealth, actively managing our accounts. Investor, we're typically getting in and buying positions and holding them for what we call the long haul, right? Holding them towards retirement. And there's a niche for everyone. And it doesn't mean you can only do one, day trading or swing trading or option trading or long-term investing. You can do really anything that you want to do. But I will say, it's also a personality, right? You have to have the right personality to be a day trader. You really do. You also have to have the right personality to be a long-term investor. So I do encourage people to figure out what their style is. It's one of the first things you need to do is, what type of trader do I want to be, all right?
Yeah.
And I often start with it's almost like a roadmap, if you will. Let's say you're going to go on a trip to Disney World because it's completely open and everyone's enjoying it down there, or maybe it's not. But if you want to go to Disney World, you know your destination, you know where you want to be. So I say start with the end in mind, or in other words, have a vision of where you want to be when it's all over. Once you decide where you want to be, then we're going to have to figure out the road to get you there, the path to get you there. So back to the Disney World example, if you want to go to Disney World, that's great. That's your destination. You want to be there. That's the end result. But how are you going to get there? Are you going to fly? Are you going to drive? Hitchhike? If you're driving and taking a bus, you're going to take the scenic byway, or you're just going to take the interstate and get there as quick as you can, right? Trading's very similar to that. Have a vision of where you want to be, and then that will help determine which path, which is also the strategy that will allow you to get there.
So is options considered part of the swing trade, or is it its own little world?
Well, options it's a strategy. So you can day trade options. Certainly don't suggest that or recommend that. You can hold them, for weeks or months. So options is a strategy. A style would be the day trading versus the swing trading, versus the long-term trading. That's more of the style. Okay, once you determine your style, then you determine your strategy. Stocks, options, futures, Forex, currency, whatever it may be.
Gotcha.
Yeah.
Go ahead.
Well, I was just going to say one of the things that, I learned about options is that speaking into the strategy, if you buy 1,000 shares of stock, it's going to cost you the 1,000 shares of stock. But with options, it's different, and you have leverage over stock. And I think that's one of the things that's appealing to me that's a little different than just the buy and hold or whatever. So you get a good amount of leverage with the options.
Absolutely. As a matter of fact, that's one of the greatest appeals of an option. Options will give you so many more opportunities, if you will, to generate money. So let's say, for an example, you just buy a stock. What must that stock do in order for you to make money? Go up, right?
Mm-hmm.
Do stocks always go up? No, we know that they go up, they go down, they're roller coaster rides, right? Every single day it's different. Yes. With an option, we can create different strategies within the option to allow us to make money in any given market. And I know it's crazy. People think, how can you be wrong, or how can you make money if a stock doesn't go higher? Well, welcome to the world of options. So there's really three main reasons we trade options. Alton hit on it right off the top: leverage. 1,000 shares of Apple right now would cost you over $400,000, right? We could go in and trade or control 1,000 shares of Apple via the option for maybe 10 grand, maybe 20,000. So 10 to 20,000 compared to 400,000, right? And we call that leverage. Leverage is the ability to control something big with something small, and that's exactly what options give us, is leverage. So there's basically three main reasons we trade options. Leverage, number one, and probably the most popular. Two is what we call a hedge. Hedge, what do you think of when you hear the word hedge? Probably the bush out between you and your neighbor's house. That's not what we're referring to here. Hedge is insurance, mitigating loss. So we can hedge or reduce loss by using options. Options are a great hedging tool to protect our portfolio, regardless of what type of trader you are. If you're a long-term investor and you're in it for the long haul, you're saving for retirement, but you still want to protect yourself. And that's a topic we would love to discuss a little bit further, is the hedging capabilities or the insurance capabilities of options. And I often teach my students, when I say hedge, you say insurance. And they're really, one and the same, right? It's amazing to me how we insure everything in this world that's important to us. Literally, right? From our houses to our cars, our lives, our health, even our pets. Okay, now, you probably don't have insurance on that crawfish. I'm pretty certain of that.
That's a negative.
But
maybe I should have had it on that fish, though.
That's exactly where I was going. Maybe you should have had it on the fish. You'd be smiling a little more than you are right now. But I just make money. Right?
Yep.
Off that fish. Right?
Oh, that's
funny. Don't you
funny.
find it amazing that we insure everything that's important to us, except the one thing we work our entire lives for?
Mm-hmm.
And that's retirement. And the real question is, why don't we insure our portfolios? Well, most people will say because it's not possible. Well, that's incorrect. It's very much possible. That's where options come in. Options give us the ability to insure our portfolios. So if the market goes down, just like if your house burns down, you don't lose money. You can bring it back up to the replacement value. And the beauty of options, not only can you bring it back up to the replacement value, but you can also profit on it.
Yeah.
That's something you generally don't do with insurance. You're just trying to cover the majority of your losses.
So I'm going to play devil's advocate. I know if some of these people out there listening and they're day traders, they have the same argument that I have with Alton all the time, is if I do day trading, I can get in and out instantaneously depending on how I see these candlesticks moving. When you do options, this is a week or a month, like you say, you're kind of stuck. I mean, you've got to predict a week versus we're just trying to predict a few minutes. So
Correct.
Build me up something here,
Absolutely. Well, okay, so good question. Great question, as a matter of fact. However, it's easily answered. If you're day trading, it's going against you, what do? You just get out, right? You pull the plug and get out. You can do the exact same thing with options. If you choose to, and it's going against you, if you can really see that it's going against you and it's not going to work, well, it's no different than day trading. pull the plug, get out. However, we're going to take it so much further than that. You're using a shorter term chart when you're day trading. You're probably using minute charts, 5-minute charts, maybe a 60-minute chart, right? Yeah. We're looking at the same data. It's called technical analysis. We're just using daily charts, right? But we can really use daily charts and then fine tune our entries and exits using, even a 60-minute chart. So we can cross different time frames when it comes to technical analysis. Right? However, one of my favorite strategies, and this is what I generally teach most people, and I'm truly convinced it's one of the greatest strategies out there for most people, is the ability to make money even if you're wrong. Now, let me give you an example. You get into a day trade in a stock, you believe you're going to buy the stock, you're bullish, you think it's going to go higher, and it reverses and goes back down. Maybe they report earnings, maybe some news events or what have you, and the stock starts to go down. You have no choice but to take the loss, correct?
Correct.
You can stay in it, but you want to be flat at the end of the day. So day trading, in my opinion, is actually a little more aggressive and risky because you have to be out by the end of the day. Now, you might say, well, we don't have to be out, but in some cases you may have to be out. If you fall under the pattern day trading rules, right? There's different regulations where you may have to be out. So that's always, that was frustrating to me to know that I had to get out of the position and take a loss, believing that if I were able to stay in it a little bit longer, that perhaps I could turn that into a profit. However, with options, and this is what most people do not understand, before I give you this answer, I want to go back to the 3 reasons we trade options. I only mentioned 2. Number 1 was leverage. Number 2 was hedge. The third reason is what we call diversified strategies. The ability to implement different strategies in different situations to do just about anything your mind can imagine. And that's no kidding, really anything you can imagine. So that third reason, diversified strategies, taking it back into the scenario we're just talking about, I can create a strategy where it does not matter whether the stock goes up, down, or sideways. I can still make money regardless of the direction of the stock. Now, most people that don't understand options are like, that doesn't make any sense to me. How can I get into a position and still be bullish and the stock go down and I still make money? Well, welcome to the world of options.
Yeah.
Right? We create different strategies, right, Alton?
Well, it just reminds me of the thing. So when I first met Jim, it was in a class, and I liked the things that he was saying, and just looking for some new information. And one of the things in I think the first day you said, Jim, was now that I've kind of summarized the definitions, I guess, of the terms, now we can talk about more strategy stuff. He goes, some of you may feel like the things that I'm going to say are illegal or like impossible, but I'm just asking you to have an open mind until I finish explaining it. And I just thought that was so funny because we all had these blocks, right? Of like, that can't be done. It doesn't make sense. And so if you're listening and it all sounds crazy, but you're still hanging on, just open your mind a little bit, because I can say personally 6 months ago, I had no clue about any of this. And now I'm like a super big advocate of it. So hang in there, because it's totally legit and possible. And anyway, sorry, go ahead, Jim.
It's still crazy for the record. I mean,
it is.
It's a roller coaster ride, because you will lose, right? At some point in time, you will lose on your stocks, whether it's day trading or options, right?
Oh, absolutely, right? We fall down, we strike out, and going back to the great Babe Ruth, never let the fear of striking out prevent you from playing the game, right? And I'm certain I told Alton the same thing. We are creating strategies that have a very high probability of success. As a matter of fact, it's very statistical. We can put a number on it, 90%, perhaps maybe on a credit spread, and we get to choose that percentage, right? But it doesn't matter what your percentages are. Eventually, you're going to have a loss. Expect them.
Coronavirus.
Right.
Thank you.
Know that they're going to happen, right? But I also have another saying: learn to love your losses. Learn to love your losses. As long as you learn from those losses. Now, if you don't learn from them, you're certainly not going to love them because you repeat them over and over again, and that gets a little bit expensive. But if we can, and
tell us about that, Alan. Tell us.
Next question.
Next part of life is falling down and getting back up, right? The old adage, you bucked off the horse, you get right back on, right? And so, yes, we're going to have losses, but we're going to do two things that often many people don't do. One, we're going to minimize them even before we get into the trade. And, a whole nother topic is portfolio management. And I love to teach portfolio management because we can manage our positions before we get into the trade, while we're in the trade, and when we're getting out of the trade. And very few people actually know how to do that. Therefore, when they have a loss, it's often bigger than what they expected, and they don't know really what they're getting into. Well, I believe that anytime we get into a trade, we should already know exactly where our exits are, where we're going to get out, our risk versus our reward ratio. Everything that needs to be completely transparent, right? So when we get in, we minimize that loss, and if it happens, if we have a 90% probability, which means 10% of the time we're going to lose in that particular strategy, if it happens, well, then it happens. But it's also a numbers game. I call it statistical. I mean, I don't care how you slice it or dice it. If you're consistently doing a 90% probability, even if that 10% hits you, right up front, over the long haul, we're talking maybe 6 months to a year, you're going to be profitable. It's statistical. And that's what options give you the ability to do, is to manage those trades very carefully.
So the bio that I read off earlier said credits and debits. Is that part of options, or is that a whole different?
Oh, absolutely. Yes. Debits and credits. Now you're speaking my language. This is getting good. Life is full of transactions. There's always two parties to every transaction in this world. Buy a house, buy a car, buy gasoline, go to the store and buy groceries. There's always a buyer and a seller. When we're a buyer, that's a debit transaction. Money is coming out of our pocket. When we're a seller, money is coming in to our pocket. We're collecting money. The store is the seller, right? The car dealership, they're the seller, right? And think about this. You're a car dealer. You sell a car. Now, you want the car to be the best car in the world for that customer for the rest of their life. However, if you sell a car and collect money up front, and the next day they wrap it around a telephone pole or something happens, well, that's unfortunate. Hopefully the buyer had insurance, right? But the seller, that's not his responsibility anymore. That's not his obligation, right? He sold the car, he collected money, and what happens to that car down the road is not really his concern. Obviously, he wants the best for that car and customer. Okay. Well, now think about that. Would you rather be a buyer or a seller? Would you rather be buying cars or selling cars? I know that takes us down a different road. I'm not advocating we become car salesmen here, right? But it's the premise of the different strategies of options. I love selling options. Okay? That makes us, that's what we call a credit transaction. And that's something that many day traders don't do, is I can sell options, receive a premium, use that for income. That's a credit transaction. So there's debits, there's credits. To make it very simple, and that's what I love to do with most students, anytime we buy, that's a debit transaction. Anytime we sell an option, that's a credit transaction. And we get to choose whether we're a buyer or seller of options. Okay. Now, we could take this in a lot of different directions, so I'm going to go just a little bit down one road. We won't go too far down this, right? Casinos. Now, you've heard the saying, the house always wins, right? Do you believe that? Does the house always win?
Yes.
Yes. The
overall.
Yes.
Yes.
Correct. Now, it doesn't mean the house wins every time. It means, like you said, Alan, overall, the house does always win. Why is that?
The odds are stacked against you. It's kind of like any of the trading. You've got different percentages of losses and wins. But then in like day trading, they talk about always doing a 2-for-1, right? If you're always putting or going for a double on the win and 1 on the loss, then you're in a sense the the house, right? You control the odds.
Right.
I mean, you only have to win, 30% of the time, if that's the case with those odds?
Right. Okay. So, very good. The reason the house always wins is because it's a statistical probability. Now, and they will have losses. You can walk in, drop money in a slot machine, and ding, 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 you win. But the goal of the house, and hopefully no one's watching this that owns a casino. They'll be like, Jim, okay. The goal of the house or the casino is to keep you there longer, right? Because it's a statistical probability. The longer you stay there, the greater your odds or probabilities that you're going to lose, right? The best thing you can do when you win in a casino is take that money. I call it TTMR. Take the money and run. Gather up your money, walk away from the table, and leave. Go enjoy it. But no, we get this taste, blood in the water, and we're like, oh, we did it once, we can do it again. Yeah, and usually we walk out by without any money, But let's go back to the statistical probability, right? That's what we do with options, right? Now John, you mentioned the 2-to-1 risk-reward ratio. I take that from a 2 to up to a 3 to 4 to 1 even. So anywhere from a 2 to a 4 to 1, which means for every dollar we're risking, we can make either $2, $3, or $4, right? That's part of the management. You have to understand. And again, the beauty of options, it allows us to really dictate those odds. And when we get into credit spreads, when we become a seller, we're literally becoming like the house of a casino, right? Now, let's go back to the casino for a second. They do not make $1 million off of every person that walks in the door, right? They might only make quarters of dollars or $20 or $100, but they do it. Exactly.
John's raising his hand.
Where are the penny slots? That's what I want to know. Where's the penny table, right? Let's play for a long time, right? They make a little bit of money off of a whole lot of people consistently over and over again. Now, picture yourself, instead of opening a casino, because you'd probably love to open a casino and make that kind of money. Well, in a sense, we can by becoming a seller of options. We're in a sense, and I want to make perfectly clear that there's no connection there between casinos and gambling, right? And option trading. But in a sense, we're going to create that type of business, the type of business where we get to dictate and choose the odds, and we're simply, obviously, as a trader, don't you think we want to stack the odds in our favor as well?
Yeah. And I think that's a good thing to point out, Jim, is that I think a lot of people, their mentality towards the stock market may be, oh, that's gambling. And that could be true if you don't know what you're doing and you're just like throwing money at it. You have no strategy, no idea. You just heard you could make money with the stock market and you throw a bunch of money in there, right? But what we're talking about is very calculated, statistical, like you said, like a casino, the house. And I'm wondering, and I don't know because I don't have any stats because I don't do that sort of research like John does, but like how many casinos are shut down because they're out of business without coronavirus? Right?
Well, to your point, it's like opening up a business, right? You got to take the risk. If you put $50,000 into a fishing supplies website, is it going to work out? Or are you just going to lose it? There's no safety net there.
Right. Well, and that's the thing too, like we're talking about losses and, if I tell somebody, if I told somebody that I lost $30,000 investing in the stock market, they may not say it out loud, but they would probably be thinking something like, what a fool. Why would you do that? That's so much money. I can't believe, right? Because their mind is closed to that idea. But if I told them, hey, I graduated with highest honors from this technical institute. I have this really nice degree and I got this job and it cost me $30,000. They'd be like, you're such a smart man. Look at you go, really applying yourself.
Right on.
I'm just saying that, like culturally you have to, think about what are you paying to learn? And when you're like, how are you stacking your odds in your favor getting a degree compared to the stock market? I mean, maybe you are to some aspect. But anyway, those are some of the things that I've learned, and yeah, so.
Absolutely. Well,
I'm going to bring it back around. So when you do the day trading, right, we have stop limits, which if people don't know this is basically, I put in my bid, I get in at $10. Well, I put a stop limit at $9.50. That way, if the stock all of a sudden plummets, I'm out at $9.50. I'm only losing 50 cents on every stock that I own. What does options do? How do you have a quote unquote stop limit for options? Because that's my biggest thing with him. I keep telling him, you have to have something to stop and get out.
Right on. And again, once you understand trading, it does not matter if you're day trading, if you're trading stocks, options, futures, currency. The mechanics of trading flows through all of those the same. So if you understand using stop orders on stocks, then it's the same thing on an option. You simply place a stop order, whether it's a stop market, a stop limit, stop on quote, trailing stop, many different types of stop orders. You do the same thing. If I buy an option, and we need to talk about what an option is basically, but if I buy an option and if it is going against me, let's say I buy a call option and it's going against me, well, I too can put a stop on that and choose to lose 10 or 50 cents and get out just the same. There's no difference in that. Mm-hmm. You're taking the mechanics of trading stocks and applying them to the mechanics of trading options, and they're identical, right? Options just give you diversified strategies, that third reason we trade options, to do anything you want, to make money if it goes up, to make money if the stock goes down, to make money if the stock goes sideways, to make money regardless of whether the stock goes up, down, or sideways. Again, the beauty of options. Now, I do want to take just a very quick second and talk about what an option is. Okay. Most people don't know. Options are what we call derivatives. Now, derivative is a big fancy word that scares people, right?
Yeah, we're from Texas,
derivative is just something that derives something from something. So options are tied to stock. Options are derivatives of the stock, which means it derives or gets its pricing and its movement from what we call the underlying stock. If I buy an option on Apple and Apple goes up and I have a call option, if the stock goes up, my option goes up. If I buy a put, if the stock goes down, my put goes up in value. So I can make money in any direction. So options are derivatives. But options are literally contracts. They're legal contracts that give us the right, but not the obligation, to buy or sell a stock at a certain price at a certain date in the future. So if I think that Apple, now here's a great example. We keep talking about Apple. It's, one of the number one stocks out there.
Sponsorship.
Right? Apple. Keyword. Apple declared a stock split. I think it's effective August 31st. They're going to do a 4-for-1 stock split. The stock will go from over $400 down to around $100 per share, depending on where the stock is at the time of the split. A lot of people are going to be interested in buying that stock. But right now, if we're trading Apple at over $400 a share, we need $400 per share. 1,000 shares would cost us well over $400,000, depending on the current price of the stock. I can go in and buy a call option, which gives me the right to buy the stock at a certain price on or before a certain date in the future, right? So, and believe it or not, we've been trading options our whole lives. Every time we walk into the store with a coupon, right? Mm-hmm. That's like an option trade. That coupon, think of a manufacturer's coupon to buy anything, cereal, for example. That coupon gives you the right to buy cereal at a set price on or before an expiration date. Okay, it's a coupon. Well, options, if you think of them like coupons, they're very, very similar. Okay, instead of buying cereal, we're buying a stock. We have the right to buy a stock at a set price on or before a certain date in the future. So if we truly think Apple will continue to go higher, let's say we buy a call option at $400. And by August 31st, the stock is at $450. We have the right to buy that stock at $400, regardless of where the stock price is. Even if the stock goes to $500, we have the coupon via the option contract that gives us the right to purchase the stock at $400 on or before, let's say, August 31st, right? And once we purchase that coupon, we're locked into that price. Now, that is one of the differences between an option and a coupon. Most coupons are free. We get them in the mail. We get them in the newspaper. You go to the mall and they stick them on your windshield, right?
Yeah.
Hey, a fun thing to do is when they stick them on your windshield, I don't pull them off. I jump on the freeway and go as fast as I can, and my kids are like, "Faster, Dad, faster!" And you see how long it takes before they fly off the windshield. Hey, by the way, that's called littering, and that'll get you fined. So don't do that.
Yeah, definitely don't do that. It would not be fun or good.
You can double your odds on that because you get the speeding ticket and the littering ticket.
Yeah, put the speeding ticket on your windshield. Take off again.
Right on. Let's just, right now the malls are mostly closed, so we don't have to worry about that. All right. But going back to the coupon, there's two types of options. There's calls and puts. Calls give us the right to buy a stock if it goes higher. Puts give us the right to sell a stock if it goes lower. Now that right there throws most people. They're like, wait a minute, a put gives me the right to sell a stock if it goes lower, and that's correct. If you believe that a stock is going to go down, let's say a stock is selling for $100 per share, and for whatever reason you think the stock will go lower in value, we can buy a put option on that, which gives us the right to sell it at $100 on or before an expiration date. And let's take that expiration date out to November. We have until the end of November. The stock's $100. The stock goes down to $50 for whatever reason. We have the right to sell it back at $100 per share. That's what that put option gave us the right to do. Now, if you think about that, it's not a lot different than your homeowner's insurance. You buy a policy on your home. You pay a premium up front, okay, which protects your home. And let's say your house is worth $500,000 and your house burns down. What do? You call the insurance company. The insurance policy is kicked in, and they allow you to rebuild it back to the original $500 value. Or close to it, right? We do the same thing with options. The beauty of options, if a stock goes down and we're insured via the put option, we have the right to sell it, if you will, rebuild it right back up to the original value. That was the policy that we got into when we bought the put option, right? Now, another very interesting thing is, let's say that everyone loves real estate, and I love, I love real estate as well. Right? I often say, yeah, but anything we can do with real estate, any strategy you can do with real estate, that'd be a fun podcast to have right there. Any strategy we can do with real estate, we can do the same thing with options. And in my opinion, easier, faster, cheaper, and maybe double the rate of returns. Now, I can actually, in a sense, prove that statistically. I really can, just putting pencil to paper and looking at some option chains, right? And so that's a fun one. But with real estate, which is I believe the two greatest ways to generate real wealth in this country, we're talking significant wealth over time especially, would be real estate and the stock market. And I think most people, would agree with that. But there are some barriers to entry with real estate. Okay, it's called capital, right? You either need really good credit and a great job with income in order to purchase properties, or you have to have a whole lot of cash to buy that. Well, we can often do the same strategies with the options market, okay? But let's say you're into real estate or even your home, and your home devalues because of market conditions, right? Well, when your home devalues, I kind of joke in a sense, and I say, don't worry. If your home it goes down in value, you have insurance.
Yes.
Right?
Yep.
Yep.
So,
Wait. Let's go down this road again. If your home devalues, you have insurance, so you're protected.
Set it on fire. You're good to go, right?
Yeah, but no fire. The market just goes down. You bought a house for $500. It's only worth $300.
Then you're screwed.
Don't worry, you have insurance. Right. Insurance does not cover devaluation of a home. Mm-hmm. It only covers damages. Now let's step back into the options market. Okay. And I want you to think it's not stock versus options. That's one thing that we need to make sure we're very, very clear on. It's stock and options. Options are a tremendous substitute or alternative or complement. Let's use the word complement. Tremendous complement to the stocks. Remember, options are derivatives of stocks, so they're very much tied together, right? When we buy an option, if that's on a stock, if that stock goes down in value, our insurance policy actually covers the devaluation of the stock, unlike homeowners insurance. A little bit hard to wrap your head around, but that's all it does cover, right? There's no damages to a stock. It either goes up or down. So we insure against the devaluation of the stock, unlike our real estate.
So I've got two questions. One will be the investment side of this here in just a second, but let's go back to your calls and puts and sells and buys. I've seen several videos that try to break this down, and it is confusing for a lot of people because you have calls, you have puts, you have buys and sells, and you can mix and match virtually, 5, 6 different ways?
Oh, absolutely. Yes. And again, diversified strategies, via the options. So you decide whether the first thing we always do is we must decide whether we're bullish or bearish. I have that I use with my coaching students. I call it the 8 steps to success. Step number 1, and when students reach out and they're like, I don't know what to do, I'm a little bit confused, and I say, just follow the 8 steps, right? We've gone through them, you understand them. It's like that recipe. Step number 1, you always decide whether you're bullish or bearish. You cannot make a trade until you decide whether you think the stock is going to go up or down. All right. Step number 2, you must find a stock. Step number 3, you analyze it fundamentally. Step number 4, we analyze it technically, and we go down the steps, right? But once we get to step number 4 and 5, once we've decided whether we're bullish or bearish, we then decide on the actual strategy. Are we going to do a debit or a credit transaction? Is it going to be a spread trade? Are we going to be buying calls, versus puts? And you're right, John. We can be buyers and sellers of calls and puts, giving us numerous opportunities, right, to trade given any environment that or any direction you think the stock will go. Okay. Now, I want to throw something out that may be a little bit crazy to you at first. And I do want to say this. We're often conditioned in life, and I call it the traditional way of thinking, right? And we're all subject to it. We get it from our grandfather, our grandparents and our parents, but we're conditioned to think a certain way. And oftentimes when something new comes about, we might be a little bit resistant to understanding it or wanting to learn it. Okay, we could joke and go back to 1993, 4, 5. It's like www what? Right? We're not talking World Wide Wrestling here. We're talking World Wide Web, right? The internet. And I still know people now that that might be quite a bit older. Have a friend. He's about 95 years old, literally, and he's like, computers don't want anything to do with them. Right? Internet, not in my house. Right? We might be a little resistant to change, okay, because we've been conditioned to think a certain way. Right? Well, it's the same thing with options. We do need to open our minds because there is different and often better ways, to do the same thing. Yes.
Sorry. Go ahead.
I'm sorry. I didn't know if Alton had a question.
No, I'm just enjoying this, and so, but I want to let John grill you here a little bit. I'm interested to see what he's got.
Okay. Now let's throw out a crazy strategy that it's not crazy at all. The American dream is to get into real estate, and everyone would love to buy homes for investments and rent them out to create what we call passive income. Right? Now, I have some rentals as well, and so I'm certainly not knocking real estate. I would, always encourage. I encourage my oldest daughter. Matter of fact, she's 1 year into her first investment property that she's renting out, and she's like, Dad, you were right. This is anything but passive, right? And I still encourage her. I say, you know what, honey, you're in it for the long haul, right? You're building a retirement, and it will pay off in the end, right? But we buy, let's catch the vision here. We buy an investment property for the purpose of renting it out to generate income. It takes capital. It takes work if you're fixing this house up. It takes maintenance, right? I'd have to say that my daughter is net negative after 1 year on her income, okay? Because so many things have broken. We're talking water heaters have gone out, plumbing issues, all sorts of things. The list goes on. And she's like, I'm not making anything. Well, you will. Just give it time, right? But we want to buy an investment property. We want to rent it out, creating income. How would you feel if I said you could do the same thing with options? Instead of buying a house, we could actually buy a stock. And using options, we can rent out, in a sense, literally rent out that stock, right, using an option trade. In other words, we have an investment that we're renting out for either a weekly or a monthly basis. In this case, we generally do what we call monthly options. We rent it out. Someone will pay us a monthly income for the right to buy our stock from us. It is so similar to renting out a house. However, you don't have to spend $400,000 on the house, right? You don't have to go through and screen your renter and hope they don't thrash your house and hope they don't pay and hope they do pay at the first of the month, right? We go through that entire process. Well, we can do the same thing in the stock market. Either by buying a stock or using an option to control the stock, we can, in a sense, rent it out, collect income every single month, right? Not waiting for the check in the mail, because when you execute that trade, it's actually called selling a call option, selling a call, not buying, the money instantly comes into your account. We've, in a sense, just rented it out. And that's one of my strategies where I say, I can do the same thing with real estate with the option market, quicker, easier, cheaper, and anywhere between double and quadruple the rate of returns. Then I'm not dealing with the 3 T's of real estate. We call them the 2 T's. I take it to the 3 T's, but the 2 T's. You ready for this?
I'm ready.
Tenants and toilets. Right? We don't have those with the stock market.
So what about tornadoes? You forgot tornadoes. We're in Texas.
We now have 4 taxes. We have tornadoes. Yeah, we have it all. Again, I want to be very clear to everyone. I love real estate. I have rentals and do a lot of investing, have a lot of mountain property and whatnot. They complement each other so well. Do both, right? Don't just focus on one. But it's often easier to start with the stock market because we can get into stocks a whole lot cheaper than we can real estate.
So back to the investment side of things, to get involved in the option trading, to me seems a little more complicated than, like I would say, day trading, right? I get in and out. I've got my money going in and out constantly, and I can invest in whatever I see. However, options, you're buying 100 shares in just one option, right?
One contract.
Right. So you're limited, especially if you're, I would say, quote unquote, poor like me, where you only have maybe $1,000 to start with. So okay. How do you start with someone like me?
Awesome. And, a fantastic question. I'm so glad you went that direction, because options are actually the cheapest, easiest way to get into investing, right? To day trade, you need a certain amount of capital, right? You're not going to day trade with $500, most likely, unless you're day trading some penny stocks, right? Increasing your risk substantially, right? You're not going to day trade with even a couple hundred. However, because of options, because of the leverage of options, remember the 3 reasons we trade: leverage, hedging, diversified strategies. Because of leverage, we literally can get into an option and control 100 shares of stock for $100, right? So options allow us to get into investing cheaper. It's less expensive because we're not buying the stock. We're buying the right to buy the stock in the future if we choose. And the beauty is you never, ever have to buy the stock if you don't want to when you're buying options. You do not have to buy the stock. There's a difference between rights and obligations. And something that I always teach my students, never forget this saying, and Alton knows this very well. Buyers have rights, sellers have obligations. Yeah, so when we're buying options, we have the right to buy the stock, and I can literally spend $100 on a one option contract, which gives me the right to purchase the stock in the future if I want to. If I don't want to, I don't have to. And yet I still make money, because if the stock goes up, so does the value of the option. I buy the option for $100, I could turn around and sell it for $200, never having to purchase the stock and put out all that money. So again, options allow you to get into trades with very little capital. And I'll take that a step further. When we get into credit transactions, this is really what blows a lot of people's minds. We actually don't spend any money. We're getting into a trade, we're collecting money up front, and not a penny leaves our account. It's a credit transaction. I know it sounds crazy, right?
That's that illegal
because we're
stuff,
selling.
Jim.
Yeah, money's coming in, no money's coming out.
Pushing buttons and money's coming into your account. Wait a second.
Yes. Now, to be fair, you do have to have the money in the account to back up the trade, right? So you have to have the money in your trading account, but it never leaves your account because you're not buying anything. You're selling and collecting an income. Now, if the trade were to go against you, yes, they'll take some of the money out of your account to cover the loss in that trade. But up until that point, the money never leaves. So I can create a strategy that has a 90% probability of success, regardless of whether the stock goes up, down, or sideways.
Whoa. You said 90? 90?
Absolutely.
Wow.
90. Yes. Now, when I started my daughters out years ago, I actually started them about 96%. 96, we're going to get into this trade. And I'd lay it out before them, say, look, this is the trade. We're going to do a credit spread, for example. Could be on the S&P 500, could be on any stock. Let's do a credit spread on this. We choose the probabilities, right? And because they were younger teenagers, and I'm teaching them, and I want them to win, we would establish about a 96% probability of success. So if we get into this trade, we have a 96% probability of the trade working out. We have a 4% chance of losing. Now, some people say, well, then why don't you just take it to a 99% probability of success, right? Never forget this. It's called the correlation between risk and reward. The greater the risk, the greater the reward, right? The lower the risk, the lower the reward. So if we're in a 96% probability trade, we have low risk. Low risk equates to low reward, right? However, with options, you would be amazed at what that lower reward might be. For example, it might be 5% for the week. It might be 5% for the month. Okay? Now, if you compare that to a savings account, that's not very low at all, right? If we're getting 5% for a week trade versus 0.1% annually in a savings account, boy, there's really no comparison there.
Wow.
Right?
Or buying a house and then being net negative at the end of the year.
Right on. Right on. Now, let me throw this out. You could say, well, there's no risk in a savings account because it's backed up by the U.S. government. Extremely low risk, effectively no risk, right? And I say, yeah, and what's your reward? Do you know at a 0.12%, which is about what a bank will pay, a bank or a credit union in a traditional savings account, at 0.12%, your money will double in 600 years using the rule of 72, right? You put that money in, and congratulations, in 600 years, that money doubles. I remember teaching my daughter that when she was young, and she loves math now. She's a little bit older, but I remember when I taught her this, she's like, how's that going to help me, Dad? I said, it's not.
Well, I hope
then why do I put my money there?
Yeah, I hope you didn't throw in inflation too, right?
Right, yeah. We haven't even factored in inflation at an average of about 2% a year. You're losing.
Mm-hmm.
You're losing 1.88% annually, so it'll never double in a million years. The reason we invest, we understand that there's more risk. We take on greater risk, but we're okay because we're accepting a greater reward. The real trick is to balance risk and reward, and options truly give you the ability with the utmost power to balance ultimately risk reward to any level that you want. And that's why I love teaching. I have students that are anywhere from 21 years old, literally up to 85 years old, right? It doesn't matter who you are, doesn't matter where you live, right? Whether you want to generate income, whether you're saving for retirement, it just doesn't matter, right? And that's what I love to do, is teach all different people and open their minds to the world of options with less risk. And people say, oh, options, they're just too risky, right? Now, Alton, you started this with a story. I was in Dallas, Texas. I flew in for a big workshop that I was going to teach a group of individuals. And I was on the shuttle bus to the rental car. And it pulled up to the curb, and the doors open. And actually, right before that, there was this cute little older lady sitting next to me, elderly lady. And she said, so what are you doing here, young man? I said, well, I'm here to teach, I flew in from Salt Lake City. I'm here to teach an options class. And she's like, oh, goodness, options. They're just too risky, right? Now, the doors had opened, and she stood up, and she went to step out of the bus. Now, out of the corner of my eye, there was a cyclist guy, and he had his helmet on, and he was on the sidewalk. Probably shouldn't have been there, but he was cruising down. She said to me, options, they're just too risky. And she stepped out in front of this bicyclist, right? Now, to make it ended good, right? He almost hit her. He did not hit her. He swerved and he almost wiped out. And it was like, holy smokes, that could have been really scary. But I remember turning to one of my coworkers when she said to me, options, they're just too risky. And I turned and said, apparently so is getting off a bus if you don't know what you're doing, right? Yes, there's risk in options. There's risk in getting out of bed, getting in a car, right?
Riding a motorcycle.
Riding a motorcycle. I'm not going to go into this story, but I'm going to say there's pretty good risk in getting on a rope swing, right? There's how do we mitigate risk, right? First of all, how do we eliminate risk? The answer is you don't. You never eliminate risk. The best you can do in life is to reduce it greatly. You walk across the street, there's risk. How do we minimize that risk? You go to the crosswalk. You push the button. You wait for the signal, right? Even once the cars have stopped and the signal says go and you're in a crosswalk, you still look both ways. You step out carefully. You do everything in your power to get across the street. Options are no different. Yes, there's risk in options, but it's the education that but greatly reduces and minimizes your risk.
Yeah, and just to, like Jim is saying that he has students that he teaches, but in my experience, he's also been my counselor or therapist through some of my own trades here lately. But the thing is that I've learned is that it's a very individual thing, and I mean, if you've listened, I do jiu-jitsu and I like it. And in jiu-jitsu, you have kind of some people who are more defensive players and some people who are a little more aggressive. And throughout that journey as a martial artist, you kind of learn, okay, do I like to be more defensive and like set these traps for these aggressive people? Or am I just like big guy and I'm going to go half my way and make things happen? And I've only been trading the options for a short period of time, but I'm learning about myself and where do I want to be? And do I want to be more like Jim, you mentioned your daughter and just reduce my risk for less reward, or am I feeling pretty bullish and I'm going to take a little bit more risk? And that's one of the things that I think is worth mentioning, that you can really tune this to your own risk tolerance, and which I think is incredible to be able to do that. It's not like a house, you buy a house or whatever, and there it is. It's in that neighborhood, and I know that there's things that you can do, but that's one of the things that I've learned about trading them that I really like.
So options is more offensive or defensive?
Well, you have options.
Options give you options. Both. Again, you define your strategy. I've been a soccer coach for a lot of years at the high school and competitive club levels, and we've won some pretty good titles over the years. But I'd always, not really joke, but I would say, hey, in my opinion, the best defense is a really good offense. Right? They can't score if they don't have the ball. We don't want to apply that maybe to driving a vehicle, but both. Really, the answer is both, right? But what I'd really, and maybe even like to work on as we get closer to ending this, is to really talk about, the core subject of why we're here. Can option trading pay my bills? I do want to say this. I've spent 25 plus years trading stocks. I've spent 20 years trading options. I've gone through multiple strategies, and I spent almost 10 years with one particular income strategy that I thought was just king. It was just tremendous, and it did so well, bringing me in weekly income on the S&P 500 multiple times per week. And I like to tell people or ask people, hey, if you're going to get paid, you want to get paid once a month or once a week? You know, especially assuming those checks are going to be fairly similar in size. Well, let's get paid every week, right? I have actually, you know, we never stop learning. Life is always evolving, and so are our trades. Several years ago, my best strategy, I decided that it was as awesome as it had a weak link that I didn't care for, and it was a credit spread on the S&P 500. And so I set out to create an even better strategy. All right. Now, first of all, I did not invent this. It's, you know, it's like the wheel. You know, don't reinvent the wheel, right? But let's like a recipe. Let's organize a strategy that fits our style, and that's exactly, you know, what I've done. I believe that in most cases, I've really come up with the best strategy for everyone, and I'm a firm believer. There's no better strategy. I've tried them all. That there's no better strategy that will consistently bring you in income. And can it help pay your bills? Absolutely, whether it's weekly income or monthly income. And I've created the strategy. I often call it my Ping-Pong strategy, which is kind of just a fun little nickname. My strategy before that was what I called the turtle trade, you know, slow and steady wins the race, right? But the whole premise of this trade is it is a credit transaction, right? We're using calls and puts to generate weekly income. And yes, we use that income to pay our bills. People view the stock market as this get-rich-quick scheme. It's really not, right? I call the stock market a get-wealthy-over-time strategy, right? But if we learn the proper option strategies, we can generate and pull income out of the market every single week. Now, the difference is it's like a baseball game, right? You have two different types of hits. You have, you know, a base hit, or you often have the doubles, triples, and home runs. Now, the more glorious and exciting ones would be the home runs. Oh, let's hit a home run, right? But the reality is the game of baseball is won with base hits, singles. Just get on base. I remember as a little kid playing Little League, and the coach is like, you know what, guys, stop swinging, boys. You know, you're 8 years old. Stop swinging for the fences. You're going to strike out. Oh, no, coach, you know, that's makes you cool, right? You'd swing for the fences and you'd go sit back down, right? He'd say, just get on base, right? A bunt. A bunt is the highest probability hit out there. Just get on base. And if you think about it, it works with every single sport in this world. The game of baseball is won not by home runs, but singles. The game of football is not won by throwing Hail Marys. Mm-hmm. It's won by...
Unless you're Aaron Rodgers.
That's right. You know, which is interesting, and I hope my stats are right, but yes, he was the touchdown king, right? He threw more touchdowns than anyone else. Do you know what else he had the distinction of throwing? What other record did he hold? More interceptions.
Really?
Yeah. Now, I may be wrong on the person, but the philosophy is the same. I do want to go to Babe Ruth. Babe Ruth was the home run king. He hit, at that point in time, he'd hit more home runs than anyone else. He also struck out more, right? The fundamentals, and the reason is the fundamentals are different, right? How you approach, where you stand, how you hold the bat, your swing, your follow-through, your angle of everything is just different, right? Now, Alton, you're into jiu-jitsu. If you really want to knock out that opponent, you're going to implement a different strategy than just trying to outpoint him, right? Get more points than him, right?
Get somebody bigger to fight the person you want to beat up.
That's right. Yeah. Even if you're boxing, and I'll just say this, if you're boxing, you'd love to knock out your opponent, but the reality is you win round by round, punch by punch. I call it jab, jab, punch, right? Mm-hmm. If you're wrestling, you'd love to pin your opponent, but the reality is it's a drawn out process, points, takedowns, reversals, escapes, things like that. So every single sport, and even going back to casinos, and yes, there's a tie in here. It's not won with the knockout punches hitting it big. The problem with trading is most people view the stock market as a get-rich-quick scheme. Right? They jump in, they take too much risk, they don't understand, they don't get educated, they don't have a coach or a mentor, and they typically strike out. Right? Most option traders, beginning option traders, they don't stay in very long. Why? They don't know what they're doing. They're not educated. I was no different. I jumped into options with zero education, said I'm smart enough, I can figure this out. The reality is I wasn't, right? And I lost. And I came to a crossroads where I had to decide, am I going to learn how to do this properly, get a mentor, which I did, and learn it, or do I quit and give up? Because I can't do this on my own, right? Mm-hmm. And so my strategy, going back to my ping-pong strategy, we're not trying to knock it out of the park. It's not a home run. It's not any of that, right? We're generating income, their base hits, every single week, enough to generate enough money to simply pay our bills, right? Mm-hmm. $500 a week, right? $250 a week, $1,000 a week. Doesn't matter what it is, right? That can go a long ways. Now, you're not going to pay off your house with $500 a week, but you are going to pay your bills, car payments, put food on the table, mm-hmm. insurance, right? Some jiu-jitsu lessons, whatever it may be.
Now you're talking my language.
Yeah. And I truly believe if people will follow that same mentality of, hey, let's learn how to do this, let's generate income, right? And let's take income every single week and wait very patiently for that home run trade to come to us, your probability of success will absolutely go through the roof. Not only have I tested that myself, over 20 years, but I've seen a lot of students do the same thing, right? Follow the strategy. And I do want to say this. It's not the stock that makes you money. It's not the stock that makes you money. It's the strategy. If you learn the proper strategy, you can implement that strategy on any stock, regardless of whether it's going up, down, or sideways, and still generate income and still generate money.
All right, so before we do the deciding factor now, I've got the hard question for both of y'all that I know all the listeners want to know. I don't have really any good news to give you on it. So, Alton, we'll start with you.
Yep.
Your best and worst transactions.
My best and worst? Man, I had one company that I got into that went bankrupt.
Ooh.
And that was not expected. And then to make matters even worse, like what you're saying, I tried to put in a stop loss, and I actually, and this is, I think, the second time I've done this, like just technically I went and I clicked the wrong button, and which then lost me way more money than I had even planned. Ooh. So I'm really excited about that one, and that's where Jim has been my my therapist. But the best, I don't know what the best is.
Can we talk about a number?
A number? Well, I will say that one of the things that I love about this strategy is that I bought 1,500 shares. No. I sold some puts, like 1,500, 15 contracts, which is 1,500 shares. That has gone against me, and that the value of the stock has gone down. And so I have the stock now, but I'm doing the strategy of selling calls now. And with those 1,500 shares, I just is like a little bit over a week, made $800. And so it's going to pay for my jiu-jitsu for the month. I'll say that. And that's definitely not the best. I mean, I know I've made several thousand on one little, like in 2 weeks on a transaction. So
you're saying you lost an X amount of money that you won't disclose, but
it's five figures for sure. Though.
Oh man. But it sounds like due to the fact that Jim's taught you to do options, you still have a chance to really kind of use your loss and turn it into a win. So you didn't really lose money. You've got it unrealized in stocks. Is that?
Yeah, I mean, like I'm, those are the numbers, and I haven't looked at it, but I would say I'm at least 85% successful in making money. Like if you did all of my transactions, at least 85% are profitable at a minimum. So it may even be higher than that.
All right, Jim, heat's on you. What's your answer?
Awesome. Yeah. And Alan, great job. I tell people, look, if you're underwater on stock, it's all about management at that point. Using options, we can manage it, get it right back to profitability, whether it takes a few weeks or a few months. And John used the word unrealized loss. Yeah, if you have an unrealized loss, let's use options to manage that trade and turn it into a realized gain. Right, which is pretty awesome. Now, this one's fairly easy for me, and Alton, you'll understand this as well. All of my losses, and especially my two, I'm not going to give you one. I'm going to give you two. Right? All of these resulted from a lack of education when I was younger, inexperienced, didn't have a clue, and was trying this on my own. No direction, no one to hold my hand. Okay. My second biggest loss was $10,000 in 0.13 seconds. Okay.
0.13?
0.13 seconds. Yeah, that's what the broker told me. He said, well, that trade executed in 0.13 seconds. Okay. Now, it wasn't the stock's fault. It wasn't the market's fault. It was my fault. I made a mistake. I pushed the wrong buttons. Basically, I put in the wrong stock, the wrong price, had a very powerful tool that allowed me to override confirmation boxes. I just did everything wrong. And I tell you, as soon as I hit execute, I caught out of the corner of my eye as that trade disappeared from my screen. I knew something was wrong. I'm like, did I just do what I think I just did? Cancel. It was too late. 10 grand in 0.13 seconds. Even called the broker and said, hey, I didn't mean to make that trade. Just kidding. That's what he said. Yeah, nice try. Execute in 0.13 seconds. I'm sure someone was really happy on the other side of that trade. All right. But that doesn't hold a candle to my greatest loss ever.
Oh, okay. I don't think I want to hear this.
And I'm going to give you the bad before the good. And again, both of these losses come between about 15 and 20 years ago, right? So my greatest loss, I'll give you the amount, I'll give you the stock, I'll give you the reason, okay? The reason was I was a bonehead, okay? I lost $40,000 overnight on Apple stock.
40. My gosh. I'm
40 grand. Yeah. And I often joke and say there's a reason why I have a Samsung Android, not an iPhone. I'm getting back to Apple 1 month at a time.
So much for
but no,
that.
It wasn't Apple's fault. It's great, tremendously good stock. I made a mistake, right? That was the bad part. I was over leveraged. I had no stops. I held a large position through an earnings announcement. And the earnings announcement 15 years ago wasn't that great. The stock plummeted overnight, and I went down with the ship. Okay. Now, learn to love your losses. The reason I love that loss is because I learned from it, and I will never make that mistake again. And what I like to do is teach my students through my pains and gains how to help them become better traders as well. I often say, do as I say, not as I did, right? Kind of what we tell our kids. Okay. But here's the positive side of that. Let's go back to the gain. Okay, 100 grand.
Woo!
Now, what's interesting about that is it was also on that same stock, Apple. So you've heard the saying, "Easy come, easy go," right? However, it took me months. As a matter of fact, I didn't make 100,000 overnight, right? It took me several months to make 100,000. It was a call option. I bought call options, and Apple was going through the roof and continued. And I was up 100 grand. And then I held those same positions through earnings announcements. The stock plummeted, and that's when I lost 40 grand. So, yes, I lost 40,000 of the 100,000 that I'd gained.
Right? Oh, you tricked me. I don't like that, Jim.
Well, it's reality, right? But here's the main point. Going back to my theory of how you can be successful, and I truly believe I have the recipe of success for anyone in the market. Okay? It took me months to make that money and hours to lose it, right? Our gains, we need patience. We need the right strategies, and over time, again, it's not a get-rich-quick scheme. It's a get-wealthy-over-time strategy, and I've proven that over and over again. We often say it's kind of like life. The stock market takes the stairs up and the elevator down, right? Work your way up, and boom. And that's what happened with me. And so even more so important to manage those trades very carefully and have patience. The key word is patience. Learn the strategies, have patience, be disciplined to follow them, implement the right option strategies, and you'll be successful, especially over time. Making $500 a week will not make you wealthy, but it will pay your bills, right? And then you control your downside, and it makes for a really good strategy for income and wealth building over time.
For sure.
That's what I've been teaching Elton and everyone else.
Wow. All right, guys, let's do this. We'll do the deciding factor.
Now it's time for our deciding factor.
All right, so can options pay your bills? I mean, it sounds like it can. You've made some ridiculous amounts of money, but then at the same time you've lost. But it sounds like that's when you were saying you were dumb and starting out, which I feel like our sponsorship possibilities with Apple's probably diminished through this conversation. But we'll see. We'll see what our options are on that, right? Coming into this, I really was a day trader type mindset. I've really got my interest perked here, though, but especially when you were saying that you had a 90% probability when you were teaching your kids, and then Alton's over here saying he's got 85%. I mean, it's hard for me as, hyper and all over the place. It's hard for me to do the long game, even if it's only a week. It's still hard for me to comprehend. But I mean, Alton just made 800. He showed me that yesterday, and I mean, 800 can definitely pay some of my bills. Now, my only side note to this is, what do I have to really pay a bill, and how long is it going to take me? That's the part that really gets me, is starting out, like we said during the podcast, if I only have $1,000 to risk or invest, how long until I can really pay those bills? What's that expectation for anyone listening? But don't get me wrong, it sounds like a great thing in the long run, especially if you are trained by somebody that has to have something like a PhD for this, because options is ridiculous. I think we had a conversation one time. There's, what was it, the Iron Eagle? I mean, there's all these stupid things that you can do.
It's the Black Buzzard. That's what the name is.
So, I mean, there's a whole lot that you need to know ahead of time. You need to go and research. You need to spend money and time with someone like Jim that can really show you what to do. Without that, I really think you're nowhere near 60% on your success rate, if I'm not mistaken. I'm not the guru, so I'll let Jim answer that here in a little bit, but it can. And is it right for you? And I think that's what Jim pointed out in the very beginning. It matters on your personality and your style, and that's what he needs to figure out for someone like me or you.
Yeah, I think, for me, definitely it can be done. I'm doing it. One of the things that I would just say, John, like with the good thing about a stock market is that you can play the game with zero money. And so you can build your confidence over time. And like, I don't know if it was Jim that said it, but one of my ideas is like, you don't jump into the workforce as a doctor now, right? You don't just open up a shop and say, I'm a doctor, y'all come on, right? You 8 years of training. So stock market, I think, can be similar, that you can just play the game without money and learn that way without having to, like you said, realize losses. Of course, you wouldn't realize any gains either, but you would be learning. And I think that no matter how old you are, if you can't devote a couple of years to learning, then well, it's going to cost you, right? One way or the other. And if you dedicate yourselves to some training with people who know what they're doing, you can accelerate that. And the biggest thing for me, and my plug for why I do this, is that I am not a fan of trading my time for money. I don't think that anyone should be a big fan of that. I think we should be spending our time on what we love, what we're passionate about giving back to our families, building relationships with our friends, even doing a podcast or something that's, I guess, focused and what our legacy is with our time. So if I can find a way to detach making money from an hourly rate, I am all in on that. And that's really what I love about the options game, is that I can spend, a couple of hours researching, learning, and then once I've developed these strategies, I can make a percentage with my time instead of, dollars for my time, which I like that a lot more.
Nice.
Absolutely. You asked the question, is option trading for everyone? And I guess there's a yes and a no answer to that question. And my answer is yes. My belief is yes, it is, providing you do it properly. You talked about percentages. The beginning option trader actually has about a 40% probability of success, not even 60, which is a little bit scary. Now, can you still make money with a 40% probability? Yes, but you absolutely must implement some very disciplined portfolio management, skills, which if you don't know what you're doing, and if you're not going to learn and educate yourself, then you're also not going to learn those portfolio management skills. And in that case, it's a dead end road. So in that case, if you're not willing to learn and study and educate yourself, then it's really not for everyone. But if you have the desire to learn and you're willing to educate yourself, we go to school for a lot of different things in life, right? If you have that mindset, can you learn this? Yes, and you can learn it a lot quicker than you will imagine. I often call it opportunity cost versus opportunity lost, right? The opportunity cost is what it costs you to get into that opportunity. The opportunity cost of a bachelor degree is, perhaps $100,000 over 4 years or whatever it may be, depending on the school, right? But what's the opportunity lost of not having a bachelor degree? It's millions over a lifetime, literally, right? So we go back to trading. What's the opportunity cost? Well, it's the cost of educating yourself, right? And by the way, that's not hundreds, it's not even tens, right? Maybe you spend a couple $1,000s educating yourself. And then I love what Alton said, you go on, and I have a virtual platform that all my students can use. And we give you $100,000 of virtual money. Virtual means fake, not real, pretend. You can trade real stocks in a real environment with virtual money and practice everything you learn, from calls and puts to portfolio management, stop losses and all that, and prove that it works for you before you even put any money into actually trading. And that's really one of the keys to success. Educate yourself, use a mentor that knows what they're doing, has plenty of experience, that's willing to teach you, not charge you an arm and a leg, by the way. Don't overspend. You can overspend for anything in life, and this isn't one of those things where you have to overspend, right? But there is an opportunity cost, okay? What's the opportunity lost of not doing this? Perhaps it's like school. Perhaps it is millions over a lifetime, right? So if you have the right mindset, you're willing to learn, follow the rules, educate yourself, and practice, then yes, trading is for everyone, and yes, it will pay your bills.
Nice. You're living proof of it.
Absolutely.
Nice. Well, I can't wait for my free lessons, so I'll look forward to that one.
Coming right up. You got it.
Hey, thanks so much for coming on, Jim. It's been great, and I hope that everyone listening's been able to, glean some of these ideas, even if you're not ready to jump into it. Even just like start keeping tabs on the market, look into these things. And the thing is, the reality is there's so much on YouTube for all of us. Like, no one has an excuse not to learn, and you can really do so much if you just put your mind to it and you have an open mind. And I think most people that are listening to our show probably fall into that category, or we would have hurt their feelings already, I'm sure.
Now, to everybody listening, I've got his personal cell phone number, so you may not get that from him. But Jim, what way can people get in touch with you so that they can learn and not make mistakes like Alton over here?
Yep.
Yeah, absolutely. Two easy ways. One, go to my website, www.investorjim.com, investorjim.com, or you can email me, jim@investorjim.com.
Great. Well, once again, you've got too much knowledge. We couldn't cover it on this show. I mean, there's a lot more in depth. Plus, we don't want to give all your trade secrets away for free, I'm sure. But have you gotten into writing books about this yet?
I've tried over the years, and I want to so bad. I actually have about a third of a book, and I can write a book. I just don't have the patience to finish it, and I do not. I wish I have or had finished it, but hopefully in the future.
Nice. All right. Well, it was a pleasure. I really appreciate you coming on, sharing your knowledge, and hope everybody learns something from this. And get in touch with him, research, do your thing, decide for yourself that based on some of the stuff you've heard today, can it really pay your bills? I mean, the possibilities are there, but you have your own decisions to make in life, and this is one of them. Guys, say goodbye.
Adios.
Goodbye. Thank you.
This has been another episode of The Deciding Factor, giving you food for thought on real life issues. Be sure to click, like, and subscribe to this podcast, as well as all your big social media outlets, Facebook, YouTube, and Instagram. Don't forget to check out our website at thedecidingfactorpodcast.com and give us comments and feedback. Until next time, stay safe and remember to keep an open mind.